Good morning, listeners, and welcome to the Trade Talk podcast. In the previous week, we saw the market crossing the levels of 17,000. After starting above the levels of 17,000, we saw the next levels of 17,300, and it was mainly because of the support from Bank Nifty as well as Nifty IT index. And we saw the market closing above the levels of 17,300. During the week, market has formed higher top higher bottom series, and eventually the market has managed to close above the levels of 17,300. So the next level to watch out for would be 17,500. So based on option statistics, if we see the market, then the market is having strong resistance close to 17,500, and in between there is hardly any major resistance. Below 17,300, 17,200 and 17,150 would be major support area. And if we see the market is dropping to either 17,200 or 17,150, then there we should look for adding some long positions. Bank Nifty has also helped the market heavily, and it closed above the mark of 36,500, which is positive. Broadly, we are of the view that the Bank Nifty has also crossed its resistance level after a period of 6 months. So there we can expect further more upside, and it may re-challenge its previous high of 37,700. That is the broader view on the Bank Nifty. Now if we go through with today's spotlight, then we may see some action in Reliance Industries. The reason is because it has planned to enter in the new emerging sector of green hydrogen. Reliance to start new energy complex at Jamnagar. Technically, it has surpassed its previous all-time high, which was around 2370, and it closed above the same. So the next level to watch out for would be 2450 on Reliance, and on the downside, 2300, 2320 is going to act as major support for it. The stock has crossed its previous high after a consolidation of nearly 7-8 months, so which is broadly positive for the stock, and eventually we may see the levels of 2500 or 2550 based on its technical formation. Now if we go through with a few global markets, then most of the Asian markets are trading higher today amid ongoing rally in Japan, sparked by the planned exit of the Prime Minister, and as traders considered slower US hiring that may delay a reduction in the stimulus. S&P 500 futures slipped. The Nasdaq was a little bit on the higher side, and treasury yield, as we discussed, they are trading at 1.32, which is broadly positive. It shows that investors are again moving towards equities. Dollar, which was around 93, is now trading at 92.20, which is again positive for emerging markets, along with fall in crude prices. So broadly for the day, global cues are extremely positive, and on the domestic side also, we don't have any major negative news flow. So in case if there is any correction, then the strategy should be to buy. If there is any higher opening close to 15,400 or 420, then there we should look for taking some profit on long positions. We are going to focus again on financials as well as metal companies, especially steel and aluminum companies. Friends, that's all from my side for the day. With this, I am ending today's morning podcast. Thank you very much for listening in, and have a great day to all of you.